Hi everyone, welcome to the proptrade.com. Hope you are well. Hope your Tuesday is going to plan. I've left my proper glasses down in, hang on a minute, you probably can't hear me. Let's check the audios on the correct audio. I didn't check that before I came, but I've left my proper, so you're probably hearing me from my speaker at the moment. Let me switch the proper audio microphone on. There we are. I've left my my other glasses in the other office, so I've got sort of spare pair on at the moment, so I can't see as well out of these. These are cheap reading glasses, so bear with me today, will you? Right, it's jobs day finally. Who would have thought that on a Tuesday the 16th of December, 16/12/25. We had some really interesting data this morning. I'll come back to that in a minute. But the ADP, the private payrolls, the ADP Corporation, have been publishing, remember, their weekly payrolls. Are a private company, not dependent on the government, and they've come in better than expected, 16,500 or 16.3 thousand. There were 4.5, just shy of 5,000 last week or last time. If we look at the details here, you can see, we had that negative call for the November 25th number. Last week we were positive, so it was a big tick up. We'd been negative here, 1, 2, 3 of the last 4 readings. So if we just, it's not going to show me all of that. But so that was a negative a number for that we talked about the week before for payrolls. We went positive last week. Remember, we had that obviously on the Thursdays when we published the weekly claims. We had that number move all the way down to 191,000 a couple of weeks ago. We were back to 236 last week. So jobs market obviously quite fluid. Obviously the lack of official data has been I've had analysts and everyone is scratching their heads, and obviously markets. The trend in the dollar is still weaker, with expectations of more cuts to come next year from the Fed. Stock markets look like they're moving up. Then we've moved down. We had quite a significant move down over the last couple of days. We've bagged some points on that. We lost some. We were long, I think, on the I'm just looking at last week's numbers here. We were long on the S&P and the Dow, but we were out of those from the 11th, and then we went short the following day, interestingly, on the Nikkei and the Nasdaq. They both hit target 1 yesterday on Friday night's close up. We shared all that on our Discord group. So obviously join us there for that if you want to follow what I do on an end of day basis. But anyway, this is a positive reading for US jobs. Obviously, the big number, what everybody's been waiting for, has been the delayed non-farm payroll. It's 12 days late. Remember, it's normally published the first Friday of the week. Here we are, the 16th of the month. So it's 11 or 12 days late, depending on how you're counting it. We're expecting about 51,000. Interestingly, both the Reuters and the Bloomberg consensus poll is on that 51,000 number. It's the first time that's happened for a while. But obviously, don't read too much into this one number. Obviously, there's lots of other data comes out with just the headline number. Obviously, I keep saying obviously, don't I? Nothing's obvious in this business. Obviously, there is lots of data that comes out with on non-farm on jobs data in the US, and it is delayed. So there'll be some discrepancies in there. So don't be surprised about that. Unemployment rate remains more or less just shy of full employment, I would argue. If we look at the unemployment rate here, which I'm going to just bring up. Is that the rate? No, it's the wrong one, isn't it? Is that the unemployment? Yeah, the unemployment rate here was expected to tick up a little bit today. Why is it not moving for me? I want that. It's on my other screen. There we are. Excuse the top of my head. So the unemployment rate obviously been coming down significantly since the COVID crisis, but it's been ticking up over the last year or so. So it's still, let's say, at 4.5%. It's still relatively full employment. 4% is really a target level. On 4.1, 4.2% is the target level previous administrations have tried to get to. It has been ticking up over the last few months. So let's just see what's happened. So there's all sorts of other things going on. Screen here. Can you hear me? Yes, you can hear me. That's all cool. So watch for that later on as well. So 7 minutes before that drops. So just going back to this morning, we've had some mixed data. The UK data's, I would argue, is actually quite positive, but the worry is that the unemployment rate is still quite sticky. So average earnings came in heavier than expected at 4.7%. So those in employment, especially those getting bonuses, has pulled this number up to 4.7% from an expected 4.4%. And last month has also been increased to 4.9% from 4.8%. So although it's down from last month's has been revised high, so we could see that there. Obviously, that's not it's not helping you if you haven't got a job, you can't find a job, you can't find a well-paying job, and that's one of the issues here in the UK. So the claimant count is still pretty heavy. It's not as bad as it was. It's 20,000 people claiming unemployment for the first time this month. Remember, we had that negative last month. PMI data is also rolling out, and it just shows the woeful state that the globally manufacturing economy is still in. So French numbers for manufacturing managed to climb over into a very well, I mean, it's good news for the French economy. It's actually moved into an expansion mode, but it's woefully low at 50.6. The more important services has actually declined from 51.4, though that was uprated last month, to 50.2. That's quite a significant decline. And then Germany, once the manufacturing engine and hothouse of the EU and Europe, in the wider Europe, still missed expectations. It was pretty bad last month at 48.4. It's been revised down to 48.2, and this month has missed again and at 47.7. It's not as bad as it has been, but if we look at the oh, wasn't it showing me there? It's not showing me that. I was going to show a little graph on that, but we've been as low as 34, 35 for manufacturing PMIs in Germany. Remember, these are forward-looking as well. That's why they're so significant. They are as sort of a calculation. It's how these guys are feeling. The Purchasing Managers Index, it stands for, PMI. So it's how these guys, what they're doing, what active orders they're putting through, and how their sentiment feeling as well is in there. And again, services much more significant for these developed economies. 52.6 from 51.3, and a 53 reading was expected. Not much better in the UK, although both better than expected at 52.1 for services and 51.2 for manufacturers. So just about over expansion mode. We saw that GDP number negative for the last quarter for the UK. So green shoots, I don't know. It's maybe getting a bit too ahead of ourselves, but 52.1, this is the key one, the services number. And I haven't got a graph for that, but yeah, so led by the sharpest rise. What's the headline now? Led by the sharpest rise in new business for 14 months. So again, the Chancellor will be blowing her trumpet on that one there. So ADP 16.3. Let's have a look how that's moved the markets so far this morning. And we got non-farm payroll in a little over 5 minutes. So we'll come back to the chart in a minute. So this is the NASDAQ, which is just a position we'd had open for a while since Friday's close. Oh, that wasn't close, was it? It was only we were live here. We took this short around about 2:30 on Friday, ahead of this big move down on Friday. But it's hit our target one area. I hadn't actually set a target, but we'd pushed this on the chart yesterday, didn't we? And we'd run into it since then this morning. So that's hit target and then return. It's bounced a wee bit this morning. So we had a big down day on Friday. If you weren't with me yesterday, it's a huge down can. That was enough to we got short at the end of the day on the Nikkei, but we'd taken this earlier in the live as Nasdaq moved over. And there's a Nikkei on the same position there. That's hit target one as well area, and it's bounced back again this morning. So that's still open as well. Let's go back to the Nasdaq and see how that has reacted. Remember, these are futures markets. We've got a 5-minute reaction to that jobs data. Not a great move. We've ticked higher dollar presumably weakening on that data coming out, the better ADP. Obviously, waiting for non-farm payroll in a minute. Chart's just disappeared. Why's the chart just appeared? I don't know. There's our NASDAQ 5-minute preview chart. So our pre-market high for the NASDAQ, if you're trading this into the open in an hour or so, 25,056. So the key 25,000 level breached today as the NASDAQ bounces up and away from our first target there on the end of day basis. So stocks relatively positive to going into the non-farm payroll data. Forex, we look at the dollar, would have ticked up. Euro dollar 117.75 here on the 5 minutes. So there's the ahead of the 1 o'clock number. There's the reaction to the data. Initial reaction was a bit weak, a bit of weakness. Weakness for the dollar. Then further weakness for the dollar. We've rallied to 117.80. We can't get over that on this 5-minute chart today. This is our high for the day. 117.78 is our high for the day. See how the ADP affects that. Just put that in as a point of reference, not trading that. So there we are. So we initially weakened a tad on the dollar, and then that's come back. So we're just sort of obviously waiting now with a minute to go to the data dropping. We haven't had any official data for a long time, have we? So if we look at the, if I just bring this chart of the numbers expected, this is the actual 100 non-farm payroll data going back to 2021, and you see 119,000 last time. We are expecting about 50,000. So you can see clearly in there the cooling of the creation of new jobs. This is new jobs created in the US market, and that's been declining throughout 2025. Obviously, we've talked about this many times, the impact of the clampdown on immigration and the activities of the ICE officers, and the cash economy being affected quite significantly. So it's not really the impact on the US economy, even though these job numbers have, you can see here, very significantly lower than it has been in previous years, hasn't been detrimental, at least as far as the stock markets. However, obviously the stock markets are not a real reflection of the US economy, and people are still we call the real economy in the US are still feeling the pinch, and jobs are tight, and people are working multiple jobs to make ends meet. And that's why Trump's been out on this cost of living tour of the country recently. So let's have a look what the number looks like today. So 50,000 is expected. Let's have a look what that cut looks like, and it's coming across the wires now. So let me just do a quick dip on that. So unemployment rate 4.6%. So it's stickier than expected at 4.6 from 4.5%. It's ticked up more. Stocks have ticked up on the headline number. 64,000 is the number compared to 50,000. So it's coming better than expected. You can see the dollar weakening on that initial action. So we've got a new high day. Are we going to get to the key 118 area we've been talking about for a while for the dollar? So non-farm payroll is 105,000, and it was negative 64,000 versus 50,000. So it's coming better than expected. Let me just show you the calendar numbers there. I'm going to open. There we are. And the calendar should update, and we'll see the impact of a potential change in rates from the Fed in January in a minute as well. So 64,000 for the headline. Retail sales flat. That's a bit disappointing. And unemployment rate ticking up. It's also quite disappointing. 2 ticks from last month, from 4.4% to 4.6%. See what the weekly claims look like. That flies in the face of the ADP numbers. So again, treat it with a little bit of salt. quite a caveat. But the core retail sales is much, much better than expected, or a tick better than last month and 2 ticks better than was expected. So 0.4 of 1% for core retail sales. So that's actually quite positive, and jobs better than expected. So in percentage terms, that's quite a significant beat, isn't it? 51 to 60, 64, 13 over 50 is about a 25% better reading than was expected. Obviously, because of the shutdown, I got to say, treat this with a bit of a caveat. However, the market is reacting as markets do. It's all in the price, as we were saying yesterday. And the dollar is weaker. Euro went to 117.95, still quite shy. 117.95. And we're currently at 117.86. So dollar weaker. Yen, 154.50. It's been moving down in the last hour or so. Last couple of hours, in fact, from the pivot area, we're here at 154.85. So we were over 155 yesterday. And dollar moving down, yen moving up. Obviously, Bank of Japan very much in focus later on in the week as well as the Bank of England. Obviously, will the Bank of Japan actually raise rates? We shall see. So down we go for dollar, yen, euro up. Dollar CAD 137.40. So we're moving lower again for the dollar against the loonie. Loonie doing nicely this week. 137.42. Sterling 134.47. We've been as high as 134.56, so we're over the 134.50. We're coming back a bit on that number. Was this? Oh yeah, that was hit a while ago, wasn't it? Sterling long, euro long. Anyway, that's 5-minute chart. So dollar weaker on the data. ADP's coming better than expected. Let's bring the my calendar's disappeared. Where's my calendar gone? Oh, there we are. Let's just bring the calendar back in for you. So ADP better than expected, quite significant, 16,300, and ADP also better than expected. Non-farm payroll also better than expected, 64,000 compared to 51,000. I haven't got any. Let me just see my. Oh, it doesn't. Our calendar's not being updated at the moment, is it? So I was going to look at the details of the nature of the type of jobs that were created. Obviously, a couple of years ago, 64,000 for the non-farm payroll would have been like people would be pulling their hairs out, but we are in a different paradigm now. It's the type of jobs. Remember, there was lots of chatter about the degree of part-time jobs that were created. Let me see if I can find a different calendar, because mine isn't up. My isn't rotating investing calendar. Let's see if I can find that one. It's got more. Yeah, let's look at that. We'll bring you that in, can't I? Yeah. So I'm just going to keep popping up. So this is direct from. I've gone to investing.com. There's a calendar here. So it might be a bit more detail. I can. So participation rate 62.5. That's relatively positive as well. Manufacturing payrolls. That continues to. That continues to be a bone of contention, particularly within the Trump administration. Remember, he came in, heralding the rise or the return of manufacturing to the US, and that clearly isn't happening significantly. But the headline number, 64,000, better than expected. Participation rate a bit ticker than higher. Private payroll 64 compared to 97. That's a bit weaker. So again, it's a mixed number. You'd be pleased with the declining government payrolls again, but again, that's obviously related very much to the shutdown. So from a 22,000 increase last time to a 5,000 decline this time. Average hourly week is also high, which is also quite positive. Earnings 3.5% from 3.7, but that's been revised high. Has that been revised higher or lower? No, revised lower from 3.9 to 3.7. Non-farm payrolls a negative 105,000. So although the headline is actually quite positive, some of the detail there is actually quite worrying. From 108,000 positive, the variance is massive. So that's been revised down from nearly 120,000 to a negative 105,000. That's a huge variance of 200,000 plus. As ever, the devil's in the detail. Although that private payroll number, as I said earlier, is actually good news. Lots of other data coming out as well. Building permits hasn't dropped for some reason. Housing starts hasn't dropped either, and retail sales was better than expected. So so unemployment, the headline 4.6%, and the wider that's a bit of a worry as well. A big leap up in the wider U6. Remember, U6 is the one we look at, or I tend to look at, given that the fact it captures a wider sector of the market, of the unemployment market, or the employment market in the US. So U6 has jumped up quite significantly to 8.7%, and that one was also revised back to 8%. It was under 8%. It was 7.9%, wasn't it? 7.8% it went down to, but that's actually really jumped that up quite significantly, 8.7% for the U6. So there's some worries in there. Although the jobs number better and significantly better at 64,000, it's still a very small number compared to what we've seen in the past. So hence the move against the dollar, which has actually come back. There we are. That's very interesting. So move against the dollar was the initial move, but here within 10 minutes of the data dropping, the ADP and the non-farm payroll, 15 minutes since the ADP, we're back to where we were basically. So the trend is still the same. You can see that it's a weaker dollar today. This is a 5-minute chart. We look at the hourly chart for sterling. Sterling's PMIs were good for sterling this morning, and that's sort of added to that move up. Euro, look at the hourly chart, similar move today, weaker dollar, but back to where we were ahead of the data, which is quite interesting. CAD, not the same. CAD's continuing to move down today and lower than we were before the numbers. The other big currency that's been doing well against the dollar has been the Aussie and the Swiss. Aussie spiked to the 66.60. We're still holding 66.50, or we're just under that, 66.50. So we're way above where we have been for the Aussie. So the Aussie still holding its gains, but it's given some of that back. Actually, let me look at that 5-minute chart. So it's giving some of that back. So the immediate spike as the data comes out has been bought back. So obviously, if you're trading with us, we have that window around big news where you can't open new positions. Trading the news is always potentially a bit of a bugbear. So that's where it's our window started at 13.25. Our window came to a close 5 minutes ago, so that's now down. So that's now not looking as positive as it was. And you can see, I'm just looking at the Aussie as an example, using this trading strategy, that would have triggered a short on that cross there. In fact, it would have, interestingly, it would have gone short here and obviously stopped you out on the head of the news if you'd taken it into the news. But that is still outside of the Bollinger Band, and that is still saying potential weakness to the downside. The stochastics are moving down, the K and the D line here, but the price is held up. So be careful trying to run with that one just on the stochastics. But it certainly has crossed, so it's looking to be short. But if you'd taken it, I think that wouldn't have, again, the 5-minute you're trading it before the major news event, it's actually crossed there, isn't it? So if it'd been automated, that would have placed a short there, but it would have been immediately stopped out on the news break, and so that's a failed trigger. But it's not this system's not great, not for trading in the news. Let the news die down and see where we go. So it still may be short as we go forward. But anyway, so So dollar's weakened. It's come back within 10 minutes of the data to where it was, basically, hasn't it? Here, using the Aussie. We go back to the more heavily traded euro. Similar pattern there. Big move up on the for euro dollar to 117.95, and we're now back to 117.76, or 20 pip variation from the top of the move. But as you can see, the high of the day pre the data is still holding as far as the bodies of the candles are concerned. It's ticked up a little bit higher thanks to the non-farm payroll data, but that's our high for the day, and the trend is still, up again. Another one that crossed to go short ahead of the. In fact, that would have gone short then. Actually, that may have, yeah, but it hasn't touched it. No, it hasn't. Again, this is the vagrancies of trading close to big news, guys. I know a lot of you like to do it. I know a lot of you think that they see these candles as lots of opportunities, and yes, indeed there is. But with opportunities comes risk. So remember, as I say all the time, my mantra is: you are a risk manager. You are protecting your capital. You are protecting your funded account, your challenge account, whatever it is you're trading. You protect that account and don't over risk it. So. The noise is dying down now from the jobs, and it's we are coming back. So we're giving back some of the gains, the early morning gains here for the euro, and that's now looking, that's now continuing to move down. So that potential short position we're talking about in the Aussie is sort of playing out. There we are. We're moving lower to go. Remember, there's still key data to go. We've had a lot of data today. Obviously, the delayed non-farm payrolls has been the top of the shop, but we still got US PMI data to come this afternoon as well, and you can see that's coming in the next hour or so. So 52.2 last time for manufacturing, so it is outperforming the US, but it's still moribund. Really around about 52, 54, 56 is where you want to be running at. Services is looking more stable at 54, so we'll see what that looks like in a hour or so when that data comes in. 15 minutes. This is 2:45 my time. That's the GMT time, so that's 15 minutes into the live cash session so far today. So a bit of a mixed bag, to be honest. Now I've digested all that data, probably biased to the upside. We had quite a good beat for ADP, quite a good beat for the headline non-farm payroll. But as we drilled into that, drilled into the details, you can see here the average hourly earnings on the monthly only came in at 0.1 of 1%. The monthly numbers come down to 4.7. Core retail sales was better than expected on that side. We are run. That's counting the Thanksgiving data. So you would hopefully expect a decent number for that. But it's coming better than expected at 0.4 of 1%. And the worry on the flip side is back to that jobs area. Unemployment rates ticked up 2 ticks from last month to 4.6%. Remember the wider U6 measure that we looked at, 8.7%. That will be a worry for many out there. And again, this is this feel good factor that you see in Wall Street and in the asset bubbles of the stock markets and gold markets. They're both going up still, and that's a bit of an oxymoron. So the main fundamental drivers for that gold market rally is still in place, and you might see a bit of cooling in 26, but we're at all-time highs again for the gold market. Stocks are coming back, but we've been successful this week shorting the S&P, the Dow, and not the S&P. That was we went long. That was losing trades, but the Nasdaq and the Nikkei have more than compensated for those losses last week. It's again, as ever, sort of a bit of a mixed bag. But trade what you see, not what you think, is always the mantra. And as you can see here, so this weakness is continued as I've been speaking there. So the dollar coming back against the euro here. So let's just have a look. What the if the expectations of rate cuts for January, which had faded quite significantly. Obviously, the other issue is what seemed like virtual Kevin Hassett, the smiling assassin, being the nomination. Because of the delay that's from Trump, it seems like some close to Trump have sort of talked him perhaps out of Kevin Hassett, given that he's so close to the president, and that's now brought in the likelihood of Kevin Walsh, the other Kevin. They were always the two favourites. Potentially getting the job and getting the nod in January, but it's going to be January before the president decides what he's doing. Sorry, I was going to bring in the I've lost it, the Fed Watch tool from the CME, wasn't I? Let's have a look, see how that's impacted January's expectations for a rate cut or not. Let's just check if this has been some of this last updated itself. 7:36. So this is 6 minutes after. So you can see here 7:36 US time after the data's been upgraded. So yesterday, chance of a rate cut was only 24.4%. It's now ticked up to 28.8%, so nearly 30%. And it's gone down from sort of 76 to 71 at the moment from just yesterday. A week ago, it was even weaker than that. So it is chances of a move maybe rising, but still, probably the data will suggest that we stick to where we are for January. Certainly, that was the impression that Powell was giving from his press conference, but still, accepting they were data dependent, and obviously how I keep saying obviously, don't I, today? Apologies for that. How the divisions within the Fed, within that committee meeting, how they roll over the holiday period, and where stock markets finish for the year and all that sort of stuff before they next convene on the 10th. It's 9th and the 10th of January, isn't it? The next meeting. Let's just check. This is the 10th, isn't it? Yeah, 28th of January. So it was the 10th of December. So it's all the way to the end of January, and then there's no February meeting, and not meeting then until the 18th of March. So this could be a key meeting, but there's plenty of data to get through. All the government hiccup data will have all been smoothed out by then. All the revisions would have been issued as well. So plenty of official CPI data, CPE data on the inflation side, and plenty more jobs data, plenty more weeks of claims, and another non-farm payroll at the beginning of January. Obviously, one to come immediately after this meeting the following week as we go into February. But we still got plenty to get through before that. So at the moment, there's a 28% chance, according to the cash in the market, of another rate cut in January. So it's not looking very likely. See how that changes. 71% chance of no change for January. And if we jump forward, January, I mean, a lot goes on before we get to March. March is towards the end of the first quarter. So expected moves 45. So here we are, 43% chance that we won't have moved at all by March. 45% chance that we will have cut by another 25 basis point, either in that March meeting or during that March meeting or before it, and even an 11% chance, interestingly, of a 50 basis point cut by the middle of March, towards the end of the first quarter, and at that second meeting of 2026 for the FOMC. So lots of data and lots of market moves before that comes along, obviously. So where are we? So dollar weakened initially, but it's come back quite significantly. So the headlines have bettered the euro, the dollar. So 117.60 is where the euro is trading at the moment. Let's look at the indices. You would have given up their gains. So let's start with the S&P, the biggest one, 6,810. So again, we jumped on to 6,828. So we're down 18 points. So it's given up those gains. So the dollar initially weakened. Stocks initially rallied, and they've reversed since in the 30 minutes since the data's come out. So it's sort of back where we are. A little bit weaker than we were on opening, but obviously that's our pre-market high. following the non-farm payroll for the S&P 500, 6828. And now we're back down. So we were also, I'll say we were short Nasdaq and Nikkei on Friday night, and this is so it was going against us again. Well, sure, I will update. I promised to do that yesterday. I didn't get around to it. I just got Christmas shopping and all the rest of it. But I will update last week's data when we finish. Now I will do that today. I've got nothing else on the rest of the day. I don't need to go till for a couple of hours. So yeah, target one was hit, and it's been going against us all morning. I've pulled the stop loss right down from Friday's entry. It was all the way up here, wasn't it? So going to leave that there for now. I might pull it down if this rally on the 1 hour chart here comes back under the into the under half of the Bollinger Band. But really, on an end of day basis, my first take is what the 4 hour chart is doing. And that's bounced quite significantly from this target zone we'd set yesterday. So happy to take half that position off. I can't remember how much that was on the Nasdaq. That was wasn't that much in the end, was it? 655 points. This was the big move down. So we've taken half of that. It's 325, whatever. Yeah, 325. Or 327 or something. But yeah, so we're still in the money on that. Our stop loss is now here, so that second position, that second half, can't lose at the moment. And the other short index was the Nikkei, also from Friday night. Here, that's the 4 hour daily. Let's see what we've got in on Friday night. We got filled. That was Friday night, 12th. It was down yesterday. Hit a target one area this morning again. It's moved back up like we've seen on the Nasdaq, but the stop loss is much. I've pulled that much tighter. Nikkei, obviously, in the market, the cash market's obviously been closed for many hours now in Tokyo, but it was weaker into close here. 8 o'clock, the derivatives market moved it up. Very much focus on what's coming out of the central bank later on in the week. But again, the 20-hour moving average being rejected to the upside. So again, it's moved back in our favour in the last hour, that Nikkei position. But again, half of that is closed, and that was a bigger move, wasn't it? What was that? That was 374 points. So we took half of that, 187 on the Nikkei yesterday, and that's still open. So the stop was a bit tighter on the Nikkei, so that might get pointed later if the US markets continue to move to the upside. Elsewhere, we had lots of Forex positions. Some are still open. Quite a few still open. Gold's still long. We're still long sterling, euro on an end of day basis. There's a Kiwi, CAD, CAD Swiss still open. They're really not going anywhere. The Aussie Swiss from Friday night, that was stopped out for 40 loss. I will update the charts for last week and for this week. There were no. I didn't actually. I did take some trades last night, but there's nothing I shared with you. I guess I was out last night, so I didn't post those. So they're not going to go on the account. But there may be some tonight. Let me just check. In fact, I won't do that now. I'll update last week and so far this week, and then we'll have a look for what may be on the cards for tonight. Remember, this is the last full trading week, unencumbered by holidays of the year, if you like. Obviously, we got Christmas week next week, and then it's New Year the following week, and holidays, and obviously markets close down. Sorry, markets don't close down. What am I talking about? They're closed for a few days. US is only closed Christmas Day. It's half day on Christmas Eve. They're back on the 26th. They're closed here in Europe and the UK on the 25th and the 26th. Obviously, there's less players around. People go off on holiday. Volumes go down, so you can have some volatility. You can have some spikes. So be careful. But traditionally, I say this every year. Traditionally, these last 2 weeks of December can be some of the most positive days of the entire year for stock markets. That's always been the case. Big recent outstanding one was 2028, the first rally of Trump tariffs. Are we going to see a similar thing for 2025? I say we are still short Nikkei and Nasdaq. See how that goes over the next few days, though. See where we go from there. So I'll just leave you with the non-farm payroll data. Both ADP, the private payrolls, was better than expected, and the non-farm payrolls headline was better than expected. A worry, I would argue, about the unemployment rate ticking up, particularly that U6 at 8.7%. And some of those details, that 105,000 decline for non-farm payrolls as well, was a bit of a worry. So I'll leave you there. And finally, just a few of the other markets. Crypto continues to be pressured. 86,000 now. This morning, we've been as low as 85,100 on Bitcoin. Oh, no, that wasn't this one. That was last night. No, we did go into this one. I thought we had, 85,200. So the decline continues, or the weakness continues to the downside. Are we pushing in an area to get some whales buying this to move this back up? At the moment, the 4 hour is negative. The daily market for Bitcoin remains negative. We've got a bit of a channel forming there, double top here. M formation broke the rising mood here from that 80,500. Remember that level, and that is really the downside area to pull. And see what's happened as well. Yesterday, we managed to get to that 86,000 level, which was this low we saw on an end of day basis right at the beginning of the month. The 1st of December, we went down there to close the day out, and then we rallied up a wee bit from there, but we're back down there now 2 weeks later here, like yesterday when we closed. So watch that 80,000, and obviously below that is the 75,000 line in the sand. Upside, I'll keep saying this, obviously, is the 92 and 95 level. So there's my 92,000. 95 sits the top of the Bollinger Band, and then up to 100,000. But that doesn't look like that's happening. However, we are still sort of in this zone here at the moment. So just waiting and seeing, I think, is what's going on. Currently, for Bitcoin, energies continue to be weak, 55.72. So we had a big down day again yesterday. We moved lower again. We did actually get stopped out on this short, unfortunately. It reversed. I pulled my stop loss too close, but we still, made money on that. And it's still moving lower, as I said. So the key thing yesterday was we broke that at 58 level, and that's a big new low for the oil market. And we've gone even lower again today, 55.60. So energies, the oil market in particular, very much under pressure, and unfortunately I didn't get the pips I was hoping on that one. We got stopped out on the reversal of that, moving the stop loss down a bit too aggressively, too quickly. But oil remains weak, 55.60 for WTI, and Brent trades at 59.50 under the hugely psychological $60 a barrel for Brent, the global benchmark for oil, 59.50 at the moment. And metals going in the opposite direction. Gold 343.12. There's the daily chart. We're still long this, and stop loss sits at wherever it sits now, 4255. So I may be bagging some more profit on that one because those candles Friday, Monday looking a bit weak at this top level here, and we can't get to the all-time high closing, as we said when we entered that trade last week, the 4,360 zone, over 4,350. We took some profit off the table on that one yesterday, but that's still long as well. And we're still just on these open positions. We just go back to the euro and sterling. We are still long this on an end of day basis. This is the euro. This is the euro. We still long this from the other day. 10th we got in, took some profit here at 17.45, and we're stop loss is going to get pulled. I should pull the stop loss up to T1 now as well. So that's in the money. And the other big move we've seen against the euro, or the open position we've got, is cable. and that moved nicely again today. And as our entry hit target 1 again, on my stop loss again, she needs to get a bit pulled up on today on that. I'll put that to entry as well. So we'd already hit target 1 for cable, but we're back up there again now. So that's still open as well, the second half of that. Stop loss now at entry on that one as well. So there we go. See you tomorrow. Tomorrow, Wednesday. What are we doing tomorrow? Let's have a quick check on the calendar. Tomorrow, it's I think a similar time. That's the wrong calendar. Where's my calendar gone again? Tomorrow we'll be with you for it's the same. What are we doing tomorrow? There's no big. I thought we were right here. I thought something else going on. Oh, well, I'll update you tomorrow. Maybe around. I think I'm sure I'll schedule for 1:15 again tomorrow. If not, we'll do a live trading of the US Open tomorrow, Wednesday the 17th. I think there's something more significant going on here. Perhaps it's only a. Let me just change the filter on this. Oh, I see things change all the time. Find the filter. Wednesday, European CPI. I thought there was something more significant going on at 1:15 tomorrow. Oh, perhaps not. I'll double check. But anyway, we'll either be trading live for the US Open tomorrow or for the US data. I thought there was some more US data at 1:30 tomorrow. Maybe not. Okay, take care, everyone. As I say, if you're not with theproptrade.com, why not? We got that fantastic offer at the moment where you wanted an instant funding account. I know a lot of you are big. You've been asking for that. We offered this $20 off a $10,000 account. So 020 is the code. So get to the website, key in the code. This is for instant funding account. No challenges, no delays. Straight away there, $10,000 of equity for only $79. At $99, it's bloody good value, but $79 is even better value. That's 126 it was. Yesterday I was doing the maths, wasn't I? You know, how much value you're getting for your $79 gives you a $10,000 account. It's not going to be last forever. It's only an offer for a week, so days are running out. So 020 is the code. If you're new to the proptrade.com, if you put in new 20, you also get a 20% discount on all funds. So if you go to our website, sorry, if you go to it's not working. Let's go to our website. That's why I see it counts. Let's get rid of that. Let's go to the prop trade. There we are. This is our 20% off for new clients. So new 20, built for traders. So pick your challenge. Lots to pick from now. And, you know, 0, Payflex, 2-step, 1-step, instant funding accounts available. 2 different platforms. Now we've got the C Trader, built for technical traders. I love C Trader. Check your balance type and then confirm your selection, and then the codes. Your coupon. There we are. The coupon's already loaded there. It's new 20 in there, and it's get you a $99 account for $79. So I'll put the codes in the coupon code there. Okay. Take care, everyone. We'll see you soon. Tomorrow, live again. Stay safe. Stay close to your loved ones. And I will see you all again tomorrow. Take care, everyone. Bye-bye. Sorry, I haven't actually gone. I'm M16. I've just seen your note here. Put a note on the join our. The best way to do that, my friend, is to come to the Discord group. If you put a request in the general chat, and they will sort you out. Okay, if it's a C trader, I don't know, it might be peculiar to the C trader, or it might be your end as well. So just try to give it another go. Okay, but ask the guys, and they'll open a ticket for you if you're having technical problems. It could be your hardware, it could be the link, your internet connection. It could be C trader as well, for that matter. So I hope I've answered your question, M16. My friend. Okay, I don't know if you're still here, but thanks for that question. Sorry, I've only just seen that. Okay, right. I'll see you all tomorrow, guys. Take care, be good, be safe, and love each